Thanks a lot for joining me on this Wednesday afternoon market recap. It has been a rather slow, at least first three sessions, especially so for Monday and Tuesday to really get this week underway. Sort of been sitting on my hands, so to speak, just following this market. Those in pro over the weekend, this is exactly what we spoke about, whereby we were expecting a little bit of sort of intra-weekly volatility. However, we are still expecting the markets to close relatively unchanged come Friday. Well, rewind or fast forward through to the close on Wednesday, you can see on the S&P 500, the net movement over the past three sessions is now negative 66 points. Okay, so largely the markets themselves, they are still continuing to tread water. In fact, if you pay attention this way, this is where we closed on Friday, and now this is where, of course, we are closing as at Wednesday. So there's a couple of ways in which you can break down this market. Number one, you could begin to say, well, this looks like that of a bull flag. Less so on the S&P 500, but on the Dow Jones Industrial Average, you can really see again that continuation type of setup. And most importantly right now is that of the NASDAQ. It is closest to the back test of this critical 8,000 handle or 8,080 points today, with this little hammer or that of a hangman at resistance, depending on which market you're looking at. Really what it sums up is that of a market of indecision. Obviously today the Fed met. They did cut further anyway, 25 basis points. The market reaction to that, or at least the expectations, were in, I guess, alignment in what the Fed actually did. They weren't too overexcited about the cut itself. It was largely priced into the marketplace. And as such, really the market went nowhere. Okay, it was rather quite an uneventful session. If there was any day of the five this week whereby, we could have expected a larger type of move in either direction, it would have been during today's session. However, with this lower wick once again continuing to form not only on the NASDAQ, but also on the Dow Jones Industrial Average and also on the S&P 500, again, it just adds to the conversation whereby we are starting to see that of support as at the rising exponential moving averages. Pay attention to this, the S&P 500, the moving exponential 10 period is now interacting with that of the intra-session movements as at Wednesday on the S&P 500. You can see by this lower wick here. The Dow Jones Industrial Average, again, similarly, the 10 exponential moving average is now interacting with price. And on the NASDAQ, a little bit different. Almost the 20 is now intersected that of the intra-session movement. It doesn't really mean all that much in and of itself. However, what we are paying attention to is if you were to draw that of a green rectangular box between these three key exponential moving averages, this is the general support blanket whereby you would expect the markets themselves to stabilize and then ultimately bounce off from, again, this traditional area of resistance turned support, and also the confluence, so to speak, with that traditional support area mixed with the exponential moving averages. Not to mention, of course, the sentiment and the psychological component of this, whereby we generally go through that of a back test. Not to mention, of course, the discussion that we have had with a bunch of these gaps which is still yet to fill. So as it stands on Wednesday afternoon, the picture itself, it hasn't really changed all that much. Again, we have been expecting that of a slow week. A slow week is exactly what the markets so far through to the close on Wednesday have dished up. We've talked about one of three different ways or opportunities or portals or pathways, whatever you want to call it, doorways that the market could take. At the moment, it's really still a mix. I think it's pretty much even probabilities at the moment. I still think, technically speaking, the most bullish outcome of the three is going to be the gap close all the way down here on the S&P 500 and the Dow Jones Industrial Average down at 26,250. Does this have to happen? Of course it doesn't. Nothing technically must happen in the world of technical analysis. However, the most bullish of the three pathways, again, number one being the breakout, number two being this little pullback down to the support area here, number three being the pullback to close this open window. The most bullish would be the closing of the open window. The least bullish short term would be just to blow on up above that of this resistance area. To us, it doesn't really matter. However, of course, we have those SPY positions, the diamond positions, and the Q positions that we've been accumulating for a number of months. Again, just sit firm, be patient, be diligent in the analysis. A lot of individual stocks are still firming up quite nicely. The biggest move so far this week, although I do not have today's session data itself, is COP. COP we started looking at 53.82 and also 54.80. To my surprise, this was on Monday. We got a big gap up. We hit that magnetic color line at 63. You can go back and have a look at the public videos that I've been speaking about on this particular stock. This was the critical sort of target on the individual trade. We not only hit it on Tuesday, but on Monday, we also hit it here on Tuesday as well. That was the biggest mover to begin the week. Outside of that, it has been a relatively sleepy world in our top 12 individual trade list. Yes, Apple, of course, it is slowly again building traction and continuing to sort of push off from this 216 handle. It's closing at 222.77 as at Wednesday. Again, this is a continuation trade, but at the same time, we haven't re-added any positions to that this week. Amazon has definitively closed its window. It's lingering here. Expect this to take off when the markets do so as well. Boeing Airlines today seems to be getting moving, really. I mean, we've now just printed a multi-week high, also a multi-month high. 370 was the original entry. If you want to go back to the period in August, it was one of the very few trades that actually triggered at 339. So again, this just continues to get moving. The next entry is at 388.05. However, the markets themselves, sorry as my phone goes off. However, the markets themselves, they haven't really confirmed yet, according to Dow theory, or even one individual market, that they are looking to push off above that all-time high resistance area immediately. It may be a process that takes a little bit longer to play out in the month of September. Again, Baidu is pulling back very nicely. To me, this looks like a textbook bull flag pattern. So again, it wouldn't surprise me to see this stock have another repeat of what we saw back on the 10th of September over here, whereby we printed a long day white Morobozu candlestick. Caterpillar again seems to be forming either that of a stair-step continuation pattern or just a little temporary sort of resting pattern very close to 135.65. This has been the target since 119 and also $120 per share. Most recently, 124 on the upside. These were all bullish trades. Again, I would encourage you to liquidate some of those positions if you haven't already done so. I've just recapped that of COP for you. Disney again continues to tread water. We haven't seen that definitive push off from roughly this 135 to 136 handle. Again, the all-time highs are within sort of reach for us at 146. The first target on this is still 145. We'll have to obviously compose ourselves and have a look at what the market is doing once Disney gets moving, but at the same time, just hang in there, be patient, and that's going to continue its trend on its merry ways. Google again trying everything in its power to break out above 1203, 1212, and also 1217. We're closing at 1232 again. A little bit of a stair-step pattern mixed or a hybrid sort of bull flag continuation pattern as well. I think this is going to rocket up to 1267 once the markets collect that bid, which is still continuing to sort of underpin the market, although it has been a little bit of a sleepy week. Just expect that these continuation patterns are going to break in the continuation of the direction of the trend. We've got IBM again slowly pulling back a little bit. I've spoken about the odds of this coming back down to 136. But at the same time, whenever you sort of at least bring up the exponential moving averages onto all of these stocks now, what you're going to find is that much like the markets, there's a very good chance that these exponentials are going to begin acting as support as well. So although we haven't seen the reaction, technically speaking, so to speak, don't be surprised if even potentially it shows up tomorrow being Thursday or that on Friday, but most certainly probably next week, you could say. Right, depending on just how long this market needs to take a breather. Again, we've been speaking about the ADX and also the CCI. They are still firming up quite nicely as we continue to linger just shy of the all-time highs. Microsoft begins, or at least seems to be turning up again. What we've been paying attention to here are the Bollinger Band squeeze. The re-entry is at 140.75. Otherwise, you're still holding firm at 135 and 139. We're closing at 138.53. This is just a longer-term sort of consolidational pattern prior to the next leg of the upward move. And to sort of round out this list at the moment is Netflix. Netflix is trying its best to sort of break out of this descending sort of wedge. It seems to me that we're certainly carving out a bottom, and don't be surprised if you see Netflix all the way back up at 361.26. Okay, I know it's sort of a stretch of the imagination at this particular time, but if you look at some of the patterns that have sort of transpired, where a bunch of these stocks have actually reversed from that of sort of bearish movements or bearish trends into very strong bullish sort of pops. All right, Netflix, of course, it may be lagging those types of movements, but I wouldn't really discount it and say that it's not possible. I would entirely say that it's probable. We could see a big short squeeze on this individual stock, not only to take us up to 330, but again, as I already spoke about, all the way up here at $361 per share. So again, very quick recap as at Wednesday's session. Again, the Fed actions in alignment with market expectations. The markets themselves, short-term indecision, but at the same time, it can be interpreted quite bullishly with this lower wick, again, interacting with the rising exponential moving averages. What is key right now, again, are, if I can bring up the right template, the ADX and also the CCI. The ADX is still resting. This is good because it's still technically below that of the all-time highs. You can see the CCI, it's sort of curling up just shy of the 100 reading on the S&P 500 as well. If you see a long day white Morobozu candlestick show up over the coming sessions, maybe not this week, but entirely possible next week, and you see the ADX turn up and the CCI definitively break 100, okay, and a bounce and a reaction off from, again, even potentially the rising 20 exponential moving average like we're beginning to see on the NASDAQ, that's going to be a really good signal, a really good sort of sign that the markets themselves are on the precipice of breaking out and moving into probably a long-lasting trend to round out 2019. So We're very, very close to actually realizing this. This is now just sort of, again, just being patient and allowing the market to sort of ebb and flow a little bit. All right, don't get pardon me, caught up in the sort of the nitty gritty, the day to day. I mean, sure, if we do see an exceptional sort of outlying signal, one direction or another, I'll recap it for you. But all of these signals so far over the past 5 sessions, they're just taking a breather prior to this impending breakout. That's the way you need to interpret this market. And as it stands, even as at and after the Fed speech today and after the market close on Wednesday, everything we've spoken about is still very much true and also very much firm in our opinion of where these markets are moving to round out 2019. All right, so that's going to do us at Wednesday. Hopefully we've got something a little bit bigger to talk about either tomorrow or on Friday. If not, I'll see you in that pro analysis class. In the meantime, stay patient, stay hungry, and I'll see you in due course. All the best, everyone. James signing off on behalf of Pivot Point Trading. Bye.